Hello everyone, this is Tom Winterstein of ChartPros. For those of you who already know me, you would know that I am a price action trader that uses technical analysis tools that are native in every charting software platform out there. This one happens to be Thinkorswim, but the same tools are available regardless of your charting software. So I've been getting a lot of questions about the market in general, and we're going to take a look at the S&P 500. Today is Wednesday, February 23rd, and I'm going to give some of my insights of what I've seen historically and then some potential levels of interest going forward. So if we look at this chart, this is a monthly chart, so it is very high time frame. It does look parabolic, but we can whittle some things down using technical analysis to try to make sense of the movements here. A couple things I'm going to point out. One is just going to be a support and resistance. If we look at this level back here, this was an all-time high, previous all-time high. That was a resistance level turned support level. And what I mean by that is price came up to here, it held for several months, dropped, came up, retested it, finally broke it, retested again, and kind of took off until the pandemic hit, when this was the all-time highs right here in March of 2020. And we've got a pretty precipitous drop. And if you look at what it actually tested, was this all-time high that lasted for a couple of months. And that was almost to the tick. And so if you got long right there and held for all that movement to the upside, hats off to you. I do utilize support and resistance as one of the tools, but it's not the only tool that I use. And so really what I wanted to do was see if there was Fibonacci or other types of levels that gave a reason for that to particularly hold. And so if we look at, we're going to put in a trend line, and if we were to just go and capture these bottoms, if you use trend alone, you would have probably gotten stopped out and wicked out. And so really, we need to make an adjustment as it made a new low. And so that's been intact, and we can see that the trend, although recently has been down, for the last several years has been up. And when I say several years, we can take it even back, further to the 80s. This high right here was the market crash in 1987 when I was in graduate school, so I remember it well. It looks like a small little blip on the screen over the last 30 years, but that was in play, this trend line. And we can see that in 2020 it actually was broken, and to me that was a significant occurrence, because I had anticipated a drop, which it tested here, broke it, retested, and really took off. And we have not gotten another retest as of yet. Not saying that we will, but we certainly could. And so what I like to do is I also like to layer in Fibonacci. So I was really curious from a Fibonacci standpoint, why did price turn here other than a previous test of this all-time high? And so I'll turn on my Fibonacci tool, and I'll do what most of the traders in the world probably did, and they took a low to a high. And that's what I had. I was looking for a 50% retracement in the March 2020s, but it didn't come. In fact, price abruptly changed at that previous all-time high. This trend line wasn't there yet, so it seemed to have turned in no man's land. And so what I did is I found a validated fib. If you understand price action trading and you're familiar with the concept of Fibonacci, this right here was a validated fib, because I've got a retracement directly to the 38.2, and I'm looking for clean retracements off these lines, because that means I can now use that as a new low anchor point. That's called a validated fib, and we would take what's called an impulse run. So if you look, right here, we got clean direct hit, and that's what I'm looking for, as a price action trader. And so now I can adjust this anchor and build an impulse run, and let's see what happens from here. So here's my new anchor, and I have snapping tools turned on. I want to make sure I snap it up to this high, and lo and behold, look, I get almost to the tick a 50% retracement off of this validated fib. So that told me and indicated to me that this validated fib was considered an active fib, because we got a direct hit right here. So from here, what I started to look for, and this is back then, because the mood and market sentiment was kind of to the downside. And we'll take a look at a lower time frame on a weekly, back then. And we know what happened. We know that the market exceeded, that previous all-time high. But if you look at the retracements and went directly to the 50, didn't stop there for long on the weekly, went directly to the 61, you got a clean fill, a little bit of selling, and then it just absolutely took off. The 78 didn't really slow it down too much. If you look at it, the 78, on a monthly, it looks like it held. So depending on what your time frame as a trader is, that worked during that month, but it didn't hold for long. We see that it kind of absolutely took off. So we can turn that off. And so once it broke there, natural areas for it to get attracted to was this support and resistance, a previous all-time high, and we can see it busted through there, came back, retested, and it kind of just meandered around there for a couple of months before really taking off to the upside. And so once that happened, I wanted to see where could the bulls potentially be going from a target standpoint. And from a Fibonacci standpoint, the first profit target would be this minus 23.6, and we see that the bulls went directly there, and some of them, they started taking profits for part of that month. But there wasn't much of a pullback. It didn't even get a retest of this 33-year trend line before taking off to the ABCD line, the second profit target right there. It didn't slow it down very much. So now I can turn on my second profit target and say, where could these bulls be taking price? And so the minus 61.8 is 48.77 half. It fell shy of there, but Fibonacci trading tells us that price could turn, anywhere between the 161 and 68. It did. So if you've heard me say lately that statistically there is higher potential in the market, but also potentially the high could be in for quite some time. Those are both statistically valid statements, and that's what I'm about, is the numbers and probabilities. So let's take a look. Where does that put us today? And if we were to look for potential retracements on this, if we took a traditional low to high, we see that the first, the 50% retracement is well below 3,500. That'd be a pretty precipitous drop. And I've learned to never say never. Anything can happen. So let's turn on these fast trending, and we see that even the 23.6 hasn't been reached just yet. Okay, but there's some other tools that we can use. Again, this is very high time frame. We can use an advanced technique that's called a high to high, where I can take this high point, take it to the recent high, and I can look for retracements off of here. And I will clean up some of these other fib levels so we can get an idea of what we're looking at here. I'll turn off this 78. That wouldn't be a level of interest if this zone doesn't hold. And so really, from a high time frame, and again, we're on the monthly, this could be a potential reversal zone right here, for the bears to come down here and perhaps maybe turn price around. If we look at structure to the left, we've got support and resistance, so I can whittle down some levels of interest. If this level were to hold, from an institutional algorithm standpoint, this would be what's called an observational area. Doesn't mean you can't trade it, but if you're short, these are some of the targets you could be potentially looking for on a higher time frame basis. And when I say higher time frame, for me, that's like retirement portfolios and things like that, where I can self-manage longer term money, not anything from necessarily from a day trading standpoint. But let's take it down to a lower level. We'll start down at the weekly, and we see some interesting developments in both directions. This is where price turned. It seemed to arbitrarily turn there. There was probably some news event that happened to make it move, and we see that we had a very nice clean 61.8 retracement. So if you weren't short here, maybe you got short around this level, your profit target would be this minus 23.6. The second one, if we turned it on, would be the 61.8. So somewhere in here we could turn on an ABCD, and so we have a potential zone of interest. These would be the potential levels within this zone where the bears could be taking their shorts off, or where the bulls could step in. We see this nice support and resistance level, which would be somewhere within the profit target range for the bears just now, if they were to continue down there. But if you look and see, at least on the weekly, and I like to turn my bull fib 78s to green so I can keep in mind what I'm looking at. because so many times I see charts that look like Skittle packages, with all kinds of different colors all over the place. So really, we're at a point where we've hit some lower time frame support and resistance right there, so price could hold. It didn't turn out a fib, but it did happen to turn there, and we had just a little bit right there, so you've got a little zone, and price retested it again this week. So price could do a couple of things from this point. On the weekly, so far this level is held. If it wants to continue back up, some targets would be another fib level, and I'll take it down to a daily level, so as we whittle down our levels of interest. So if you happen to get long or are long, these could be some of your targets back up to the upside, ultimately back up to here if these levels continue to breach. If these levels don't hold, then we saw the targets that were down below. So as we whittle this thing down to where we are right now, price can always do whatever it wants, whenever it wants, and go in any direction for any particular reason. But if I were to narrow this down from a day trader, remember we started at the monthly, as to what could possibly happen. We've got a couple levels, pretty much a zone, an area of support that's held a couple of times. Right here. That's held, and what I have experienced in my trading career is levels hold until they don't. Okay, and so price could hold here and go back up, or like we said, that 61 is held. They could be taking it up to these sorts of levels, and because I'm going to turn that off just for my 4-hour chart, because it seemed to turn a no man's land, I would look for a validated fib off of here. Not really seeing one. Get up to here, and I've got a 78% retracement, so this is my validated anchor. These could be potential levels of interest for shorter term longs, within a day, within a week, within a couple of days. If it were to come down here and get long, we see we've probably got a 38% retracement with all the volatility and fast moving prices. We've got a retracement right there that could take price up to there. So right now, as in many cases, it looks like price is in the middle, and so the name of the game is waiting for your levels. And so for today, here's my 4-hour levels. These would be my potential levels of interest to the long side, and this could be my potential level of short that's to the upside. To kind of bring us back full circle back to our monthly view, here's some of the higher time frame levels. We see what price could do on the shorter term. On the higher time frame, we see these are potential levels of interest to the downside. If those don't hold, we've got our traditional fib from our low to high, and we've got potential targets to the upside. So there you have it. If you like this type of analysis and you understand these types of charts, we have a monthly charting subscription with a free 7-day trial where you could subscribe to our charts that we put out every day. Most trading days, we publish 15 charts a day, including the Indice futures, gold, oil, and 9 different Forex charts as well.